Malaysia rejects consumption tax reinstatement, introduces luxury goods tax. Malaysian Prime Minister Anwar Ibrahim recently announced the implementation of a luxury tax starting from May next year, with tax rates ranging from 5% to 10%. To encourage tourism, the government will exempt tourists from paying luxury goods tax. Malaysia currently imposes various taxes, including income tax, real estate profit tax, import and export tax, sales and service tax, stamp duty, and more. The luxury goods tax is a special tax aimed at high-value luxury goods in Malaysia. The main objectives of a luxury tax serve two purposes. Firstly, to boost government tax revenue to address public needs and support social welfare programs. Secondly, to use price adjustments on luxury goods as a means to influence consumer spending habits and attain goals related to resource allocation and social equity. Implementing a luxury tax can contribute to reducing the wealth gap and promoting social equity. Luxury tax imposes higher tax rates on expensive luxury goods, leading to increased tax payments from the wealthy on these items. This system helps distribute the social burden more equitably and provides additional social benefits to disadvantaged groups. The collection of luxury goods tax allows the government to regulate and oversee the luxury goods market effectively. Taxation measures can help limit excessive luxury consumption in the market, reducing waste and promoting more rational resource allocation. Anwar Ibrahim had announced the intention to impose a luxury tax in the 2023 budget on February 24, but it was not implemented at the time due to various reasons. Back then, Malaysian tourism participants expressed concerns that the government's luxury goods tax could potentially reduce Malaysia's appeal as a shopping destination. In response to inquiries from members of parliament, Anwar Ibrahim clarified in a written reply that the government does not currently intend to reintroduce the consumption tax. On April 1, 2015, Malaysia's former Prime Minister and Finance Minister Najib Razak introduced a 6% consumption tax. In May 2018, the Pakatan Harapan coalition won the election and took office. On July 29 of the same year, the government passed legislation to abolish the consumption tax. Instead, they introduced new policies, including a 10% sales tax and a 5% service tax. Prior to Anwar Ibrahim's announcement of the 2024 budget on October 13, various political parties urged the government to consider reintroducing the consumption tax in the coming year as a means to boost government revenue. Nevertheless, when Anwar unveiled the budget, he chose not to reintroduce the consumption tax. His budget announcement included raising the service tax rate from 6% to 8%, but this increase does not apply to services like food, beverages, and telecommunications.
Tune in every Monday to Thursday at 8 p.m. for Qingqiao View, the Business Bridge.